Welcome, Curtis, retiring the stock market. How are you?
Good.
It's July 13th, 2024, session one. Welcome.
Thank you.
So I'm getting into it. I want to kind of start fresh with a fresh slate. I
Okay.
know you have experience, and sometimes it's difficult to do new things once you've already started. But think of it like this: you're level 2. I want to get you to level 3 or level 4 for that zone.
Exactly.
Or if you're level 3, I want you to get to level 4, level 5, to where we can you can consistently make more money more consistently.
Yep.
And the first thing I want to start with a fresh slate, a clean foundation. I want to start with stock selection.
Okay.
Now, there's 11 criteria to get stock selection, proper stock selection.
Okay.
I want to go through, let's say, we can do the first 6 today, and then we can do the next 5 next week.
Okay.
But I'll mention all of them now. We don't want to jot them down. First one is the 10-year chart. Where when you're a professional,
Yep.
you don't have the luxury to just do random stuff, willy-nilly trades, invest in anything you want. You need to go with the tried and true, right?
Okay.
So the 10-year chart is to say that you pull up a chart on the stock that you're interested in. You pull up the 10-year chart that shows what 10 years of trading, right?
Yeah.
And ideally, it'll have a graph going from the bottom left to the top right. And what that shows is the stock has done well in the last 10 years.
Mm-hmm.
First of all, it'll show that the stock has traded for 10 years. I don't give the check mark. We're doing check mark. We're checking boxes, right? I don't give the check mark for a stock that hasn't traded for 10 years.
Okay.
If there's a new company, that's great. I would maybe watch it, maybe be very careful, get into it, because what? Because we know that business, as far as business is business. And 9 out of 10 businesses fail within the first 5 years,
Mm-hmm.
even on the stock market. So when you have a stock that's on the stock market, trading stocks, providing a service or a product to people, there's other things happening than just the company profits. For example, there's a CEO. The CEO, there's the board of directors. There's the company's ability to corral investors, right? So it's not only that they have a good product, it's that they know how to function, and they know and they're accepted on the stock market. Different things.
Yes.
So the 10-year chart is going to basically prove that they're trading, that they're doing well, that they're making money for their investors, and that they survived for these 10 years.
Okay.
So, like, what stock? Give me a stock that you definitely like and that you want to be trading. Can we use one example?
Let's see what I'm in right now.
And are you able to pull up charts?
Yeah. Just let me log in to Charles Schwab real quick.
Okay. I know you were trading. I think it was Tesla.
Yeah, I don't particularly care for Tesla. It was more about momentum with that particular stock.
Well, you mentioned momentum. Tesla has great momentum, and it has great volume.
Yeah.
And it has a large trading range per day. So, like with Tesla, for example, you might want to stay on that one, and I'll tell you why. Because you wanted ideas for trading.
Mm-hmm.
You can like put an order. Let's say Tesla's at 251, right?
Yes.
You can put an order to buy, let's say, at 245, right?
Mm-hmm.
For example. And then let's say, it picks up. It might pick up, it might not, right?
Yeah.
But if a stock dips, it'll pick up. If it dips 6 points. And then you put another order to sell either at 250, 251, or at 257, which is to say you're going to get 6 points or 12 points out of that. I do trades like this, okay? And you're just using the variance, you're using the high and low for the day.
Yeah.
And listen, it may pick up, it may not, but if it picks up, that's a profitable trade.
I see what you're saying.
And
Yeah,
let's say you
I think
have,
I was looking at it slightly from a different perspective, as in they the stock doesn't trade off of technicals at all, and it's pretty frustrating at times. So
yeah,
I typically stay away from it unless it's just a really green day or a really red day, and then I look for different levels in order to get in and out. But other than that, I don't have a real passion for that stock.
yeah, I use the technicals as a guide,
Okay.
and we know that a guide only, and we know that trading is more of an art form. I think it's an art form as opposed to a science, as opposed to a black and white 1-0,
Yeah.
because when you apply your skills, your results are going to be different.
Mm-hmm.
That's why I say it's more like an art form.
Yep.
So you use these technicals as a guide, but at the end of the day, you have to have that what I call intuition
Yes.
to make the best proper trade.
Exactly. I agree.
So like so about the 10-year chart, number one, are you able to pull up the 10-year chart for Tesla?
Yeah, I'm sorry. I had to switch some things around on I run multiple rigs here, so I'm logging in right now, and I
No
like
worries.
I like to look at Nvidia because that's one of the stocks that I'm long on, and that I'm particularly interested in maintaining.
Yeah, if you want to, we just jump to the video now. We can put Tesla on the back burner.
Yeah. All right, so I have my Charles Schwab account pulled up, and I'm looking at the 10-year chart for NVIDIA right now.
Wonderful. So, like, tell me where it starts 10 years ago.
Okay.
Just give me a ballpark number.
Yeah, I'm sorry. Give me, my computer's running slow. Go ahead and change that time frame.
These companies, you can see that they've done well over the last 10 years.
Yeah.
Basically, like bottom left and top right. And the theory is that they're going to do that again. They're going to continue doing that. That's the theory. Like the trend continues. If it's a great company, they have a great product, they're going to continue doing great.
So
And what do you have?
I'm logged in right now. I'm trying to adjust the time frame that it's showing me, but it only goes to 360. What am I doing incorrectly?
Well, that's okay. If you
I only have 3 years of information.
It's funny. I had the same problem with Schwab. When I had my TD,
Okay.
I was so used to that. And then when the Schwab platform has changed, and I was like, "Where's the 10-year chart? Where's the 5-year chart? Where's my PE? Where's my dividends?"
Yeah. So
No
right
worries.
now for the 3 years, it basically was flat, and then it was just recently in 2003 that it began to climb to the right.
Okay, so it is going up, right? That's a trend.
Yeah. Yeah.
Now, if the trend was going down, that would be a little different. Okay.
Yeah.
You'd have to have more caution with that.
Yeah.
But you can agree the trend is going up. So like one thing you can write down, follow the trend. Trends are more likely to continue. Write that down.
Okay.
Follow the trend. Trends are more likely to continue. And when you get around to pulling up the 10-year chart, you can do that later.
Yeah.
You'll see that the NVIDIA has gone like more than 5 times. Like if it started at, let's say, if it's a 130 now, then 5 years ago it was like under $20. Which is to say that it has 5, 6, or even 10 full return.
Yep.
And that's the kind of example where you have great growth and great exponential returns for investors like us.
Yep.
So not only are we trading, like, but we're following the long-term trend. So because of that, we have an advantage. Like if we were to trade lumber or soybeans or something, or gold or equities, what you might find is that there's really no long-term trend. It's kind of going up and down, supply and demand.
Okay.
Zero sum, no wins, no gains. It's just end up going back to where it was before. But if you're in a stock like Tesla, any of these stocks that I want to get into, there's a decisive trend, and we're going to have an advantage that even if like it may not go up in a day or in a week, but we keep on that stock. Like if you look at the 10-year chart for some of these companies, it just goes straight up really nicely too.
Yeah.
So the question is, how do you really lose money in that stock, because it's just going straight up?
So how do you? I'm sorry. Go ahead, continue your thought, and then I'll ask.
We can learn a few things from the long-term investors that don't really even trade, that get like average return of like 10% or 12% on the S&P 500 over time, and an exponential return over time, with having really no skills, just holding a good stock. We can learn from them that staying with the trend, we have an advantage.
Yeah.
It's not random. Like people, like even professionals will tell me, oh, stocks are random, human emotion, etc. But if you're looking at a trend, Curtis, and you have a 10-year chart and it's going straight up, that's not random. That's not random. That's a decisive trend. If you're in poker and you spot a bad player, they're a bad player.
Yeah.
And you can use that to your advantage, correct?
Correct.
So if you spot a bad stock that has no PE, has no earnings, it's going down.
Yep.
Going down over time, it's having all kinds of problems. It's not going to flip around and become NVIDIA all of a sudden. That's just not logical. You know what I mean? In the same sense, NVIDIA stock or Apple stock, these stocks I want to talk about, are doing so excellent. They have everything going for them. They're providing the product. They have real employees. They have real profits.
Yep.
And then they're not going to just turn around and implode in the future. They're going to ideally continue the trend, and you're gonna have the advantage by following that trend.
So my question that I was going to ask, and then I pulled up investing.com and I can see the 10-year trend on that one. And that's the other one that I use, another tool that I use in conjunction with the Charles Schwab platform. So I can see exactly what you're talking about, but it was essentially flat around $20 for many years, all the way going back to 2000. And then, just recently, it's been on that upward, straight up trajectory.
You said 2000, so that's 24 years ago. So that means something. That's the test of time. Like these companies you're going to invest in have stood the test of time.
Yeah.
Now you probably know that Coca-Cola has broken 100 years in the stock market.
Yeah.
As a record, and I like to think that's just proven success.
Yep.
It's not only the product is good, but the people in the company are functioning, and it's functioning very well in the stock market.
Yeah, exactly. And then the other question that I was going to mention or ask is, I'm in agreement with you that they have an established history. The trend is likely to continue based off of it's an established company. They've worked through all the difficulties. But how do you mentally prepare for the inevitable downturn that happens for a month, 2 months, 3 months, or whatever that time period may be, that stock is going down and your investment is taking a major hit before it turns around?
There's a few things you can do. For one, we can here just put a little note. How do
Uh-huh.
you protect yourself? Is another way to say that, right?
Okay.
You can use a stop loss, right? Stop loss.
Yes.
Now, I use mental stop losses. Like, I noticed that if I put it, let's say we're in the video and we
Uh-huh.
get it at 131. What you could do is you look at the swing. You look at the average swing for a day in the video, and
Okay.
let's say it's 7 points, right?
Yes.
I tell myself, well, I don't want to lose more than that. I'm going to cap my losses at 7 points. So I get at 131, at 126, no, at 124. Below that, I'm going to get out. That means, it went down. I want to cut my losses and walk away. So at
Mm-hmm.
120, let's say 123.99,
Mm-hmm.
I'm gonna put a sell to get out. Okay.
Okay.
I notice sometimes when I actually put the order in,
Yes.
it'll hit, knock me out, take a loss, and then they'll go right back up. So
Yeah.
what I do, I put a mental stop. Like I say,
Okay.
okay, well, if I got to be watching it, right? And that way, I said, listen, I'm at my threshold. I gotta get out. I can wait a few moments. If I'm doing a day trade, I'll make that decision right there. So I protect
Okay.
myself. So, and then I reevaluate, right? If I'm out, I reevaluate, start fresh, right?
Yeah.
What would generally happen, I think, is the stock will tend to go up because I'm gonna get in on an uptrend, right? And then I'm gonna put an order to sell, and I'm gonna capture a profit. So I like to write this down: up and out, down and out, up and out, down and out. Which is to say that there's two goals in investing, right? In a
Uh-huh.
trade, there's two goals. There's a win goal and a loss limit. Write it down. Win goal, loss limit, which might be similar to poker if you
Yeah.
do that. So in the back of my mind, I'm just telling myself, listen, I got to the video. I want to get 6 points out of it. I'm looking at the swings. It moves 6 points, 10 points, and I'm gonna get at 131. If it goes to 137, I'm out. I'm done. Okay. Now this could be, let's say, a 3-day trade, right? Not
Okay.
necessarily a day trade. I'm gonna give it 3 days, 4 days, and I'm gonna watch it. But if it hits my loss limit, which is my down and out, I'm also gonna be out.
Okay. Got you.
So when you say protect yourself from the inevitable correction, well, we have the ability to limit our losses, right?
Yeah.
So one thing is with mental stop losses, and also with physical stop losses, with the orders in there.
Mm-hmm.
Like if you know that you're going to double guess yourself, and you know that when stock is against you, you know that feeling like, oh, I'm losing, I'm getting killed.
Yeah.
You know the feeling.
Yeah.
If you you know uh can't pull the trigger, then just put a physical stop loss in there,
Okay.
and that just forces you to get out.
Okay.
Now back to the main point. If there's an uptrend in the stock, you have that advantage that you're gonna partake in an uptrend, and you're gonna have the advantage that it's more likely to go up than down
Mm-hmm.
over time.
Mm-hmm.
Now, in a particular day, it may not. If it's any particular day or any particular week, you may have a downtrend. It may go down, and
Yes.
that's why day trade is more difficult. Like if you look at, like, let's say, long-term trading,
Okay.
it's not really that difficult because you're just going from the trends, right?
Okay.
The shorter the trade you have, monthly, weekly, daily,
Yes.
it becomes more and more difficult because more things are happening, and there's less of a trend day to day than there is, let's say, quarter when they release earnings.
Yeah.
The
That
earnings
makes
are good. They tend to get a boost.
Yeah.
If the market loves the stock, it's a quality stock. It's in demand. The stock goes up.
Yeah.
If there's a lot of good news, I'm not sure if you follow news, but stocks that has a lot of good news, you know, they get a little boost, you know, these little boosts happening, you know.
Yeah.
So the shorter trades you get, the more difficult it is.
Yeah.
Yeah. Questions on that?
No, that makes a lot of sense. And the last thing on those, would you recommend doing like, okay, we've decided that we want to get, let's say, just keep it at an easy number to remember. We want to get 5 points out of it. Would we set a trailing stop? So if it is in an uptrend and it continues up, when we lose 5 points, then we sell automatically. And then would we also want to consider like doing puts in order to hedge that stock bet?
I generally do not trade both ways on the same stock at the same time.
Okay.
And I'll tell you why, because like what I like to say a novice trader, what a novice trader will do is they'll jump on a stock like Nvidia, right?
Yeah.
And they'll try to make these brackets in their mind. Oh, we're going to get this profit and get this loss. Well, what a novice will do, they'll have no rhyme or reason. They don't know what they're doing, right?
Yeah.
But when you start making rules for yourself, disciplines, you can, like, let's say we just talked about a stop loss, right?
Yeah.
Well, if the stock goes down to 126, right, and I get stopped out, right? I thought the stock was going up, you see, and I take a loss in that stock. So I was wrong, right? So how intelligent would it be to say, "Oh, now I'm going to go short at 126," you know? And then what would happen? What's
It
going
goes
to
right
happen?
back up. Yeah.
And then, oh, it's going up. Let's go long. Then what happens?
Yeah.
It's like so I don't. If Dividend is doing great, unless I think it's dumping or going down, I'm going to stay long in it. I
Okay.
have like these mental notes for myself. I'm not going to go. I'm not going to tell you long, short, the same stock. That's even more difficult. Like you're giving yourself more difficulty.
I got you. Okay.
And there's a chance you could be wrong both ways, right?
Yeah. I've
So
done that before.
if I'm in a stock that's tumbling that I think is going to take some downside, I'll do some puts or I'll short the shares, but I won't. I'm not going to go long and short in the same stock in the same day.
Got you. Okay.
More than likely, it's just more difficult. Like if you don't even know where the stock is going, maybe reevaluate. You know.
Okay.
They have software. You know. So here's another thing. They have software that will give you like indicators.
Yeah.
And they even have bot traders, right? But I feel like that kind of takes the intuition away from the trader. And you get to the point where you're not even sure what your bot is doing at some point.
Yeah.
So I want you to do these trades manually.
Gotcha.
I want you to use your intuition, your skills to have a game. Write this down. Have a plan. What is it? Have a plan.
Okay.
Plan, and then play your plan. You know, I messed it up. It's supposed to say, plan your play. Plan your play, then play your plan. Or that. Plan your play, then play your plan. So when I go into video, if I'm long, I think I'm probably long. I probably won't short the video. My plan is to get X points, 6 points, 5 points, 7 points. And that's my plan. Now, if it collapses and I take a loss, I'm out. I'm going to just wait and reevaluate. But maybe I'm done for the day. I'm going to go to another stock. Okay. I'm going to kind of keep hitting it. You know, it's like I was wrong already, so maybe there's something off. You know.
Gotcha. Yeah.
Take my licks and walk away.
Yeah.
You know?
Yeah.
Okay, so the 10-year chart is a great indicator. I want you to use that as a checkbox.
Okay.
We have 11 criteria. So when you evaluate a stock for trading, you're not going to have all 11 checkboxes. You might have a 10-year chart. Okay, let me run by the rest of them. Okay,
go ahead.
Next is volume. Number 2, volume. Put 2 million, 2M plus per day. Okay. Now, volume is a sliding scale, but I know it's like with 2 million or more a day, it's a big stock. You have a lot of investors.
Yep.
And you may have heard me say that the reason that that's important is because when that stock dips, whether it's Apple or Nvidia or Tesla, even those investors are going to come by the lower price, going to bring the stock price right back up, and that's going to save their ass.
Okay.
If you have a low volume stock and that stock happens to dip, there's not enough investors in there that are going to even know that are going to participate to buy those shares lower. And you could be stuck in that stock for 9 months.
Gotcha.
I don't want that to happen. I want you to be in a very liquid, very high volume stock.
Gotcha.
2
Okay.
million plus.
Yep. Got it.
Next is PE. Number 3.
Yep.
Just that it has a PE. A PE means a positive number. I think average PE is between 10 to 20, but nowadays it's more like 30. Follow me. So any positive number is good. If it's a dash or a negative, that means it's losing money.
Mm-hmm.
That means it does not get the checkbox. Stay away.
Okay.
However, if you have, 7, 8, 9 checkboxes already, and the PE is the only one that they don't have. I remember Amazon didn't have a PE for a long time, is because they were taking all their money and reinvesting, expanding.
Mm-hmm.
Then finally they showed the PE, and the stock took off even more.
Okay.
So there are exceptions, but you want to show a positive PE. If you have a dash, that stock's losing money on paper,
Yep.
and you want to be leery.
Yep.
Next is dividend. Dividend, most stocks don't have a dividend. I know that. But if you get a dividend, that's better than not a dividend. It's just an indicator that the stock has the potential to give money to its investors, and that's a responsibility that they have within the company. And that to have a dividend is better than not have a dividend.
Yes.
Even a tiny dividend like Apple, tiny dividend. I think Nvidia has a tiny dividend. That's a checkbox. It's better than not.
Okay.
Now, that's not to be confused with a dividend stock. Let's say like Philip Morris. That's a dividend stock. That's that also has a dividend, but the stock is a different thing. It's a high dividend stock.
Explain the difference there. I'm not sure I'm understanding.
High dividend stock is a different psychology when you trade that stock. If you're in Nvidia or Apple, you have like 1% dividend. You're not in the stock for dividend. You don't care about the dividend because it's only 1%. And you're looking to get share growth, SG. Share growth, meaning the stock is going to go up over time. If you're in Philip Morris, PM, or MO, Altria, for example, which I have, those stocks don't really go up over time so much. So you're looking to focus on getting that. You're looking to focus on getting that dividend.
Yeah, it's like
5% per year, 8% per year, 10% per year.
Yeah, it's like a Ford stock where it's not going to move and you're just in it.
Not so much.
Okay, gotcha.
So it's a different trading strategy.
Okay.
Okay, number 4 is CC. CC meaning cover call.
You mean that's 5, right?
You're right. 5 is cover call.
Okay.
Cover call means that you can look at the next month. Well, first of all, has to have an option chain, right?
Yes.
And then you look at the next month and you see the cover call, and you're getting at least 3%. Most cover calls give you 3 to 4% return for the next month. And which is to say that, I want to get you also to focus on cover calls.
Yes.
It's a way to get consistent money every month to pay your bills.
Yep.
And that's going to help you long-term retire in the stock market.
Yep. Now, when you say 3%, what are you looking at? Like, I have a couple calls on Donald Trump stock, DJT, and I made $165. And if it goes up, I'll make a couple of dollars before they get exercised. And then if it goes down, well, hopefully it won't go down more than $165. But I have 100 shares of it, and I'm selling cover calls for it.
Okay, wonderful. So we just use math, and like if I was to ask you, what's 5% of 200,000? What would you say?
So times 5%. So it's $10,000.
What's 5%? $200,000.
10,000, right? You said
Wonderful.
10,000.
So yeah,
Yeah.
so that's correct. So basically, you know math, and that's great. You know math, Chris, because I'll tell you some of these sessions, I'm teaching people math the whole time, and it takes longer. So I'm glad you know the math. That's important. So what we do, we take the share price. So we can do
Okay.
DJT. Give me a share price for DJT.
Let me look it up 1 second. DJT 3124.
124. So let's say, so here's the situation. You get in right now at 31.20.
So just to correct, at close, it was 30.89. During after hours, it went up to 31.24.
That's fine. It doesn't matter. That's fine.
Okay.
We're gonna go with the close. We're gonna go with the close price. Okay.
Okay. So 30.89.
30.89. So here's the situation. You get in now at 30.89. Okay.
Yeah.
And we're gonna write the cover call for next month. Now, considering it's the 13th, right? We can write like the 9th. I think August 9th is close enough.
Sure.
We can even go higher. I think August would be 16th.
Yeah.
What's the
Oh, look at it 1 second. Let me
what's
pull
the
it up.
weekliest for August? Can you pull the option chain?
Yep, I'm pulling it up now. So the weekly, you want the month? It's so 13 days from now is July 26th. 20 days from now is August 2nd. 27 days is August 9th. And 34 days is August 16th.
I think the 16th is a closer one. You can do the 13th and the 16th, but let's just do the 16th from now.
Okay.
And that's the monthly. What I mean by the monthly is it's not the weekly. The weekly is like the first, second, and fourth week, but the monthly is the third week. You follow me?
Yeah.
Okay, so ideally you're gonna stick with the monthlies, but you can always do a month with depending on where you are. But let's use the 16th. So look at the option chain for the 16th.
Yep.
August 16th. And what does it say? What options do we have above 30? We have 35.
Yeah. 32, 33, 34, 35, 36.
We have a 30. We have a 34.
Yeah.
We have a 33.
Yeah.
We have a 32.
Yes.
And let's take a look at 33. Okay. How much is it? What's the bid and ask?
Bid and ask is the ask is 4 and the bid is 3.25.
I'm getting some feedback on your side. Is that me or you?
Can you hear me better now?
No, it sounds like you're like Darth Vader.
See if I can make
You don't have any batteries. You don't have any batteries that are going out, do you?
No. It's connected to separate computer.
You're gonna hear this. You're gonna hear this on the record. You're gonna hear this on the recording. You're gonna be like, "What's happening?" But let's continue for now, okay? I'm pretty sure I'm clear because I just use my phone and I don't have a problem. But there's a buzz sound. Go ahead.
Is that better now?
Yes. What did you do?
I just changed one of the settings on here, so hopefully that works.
That's better.
The ask is 4, and the bid is 3.25.
Okay, so let's say you see how 3084 and you put that to 33. If you go from 3084 to 33, that's 216. Is that right? 216 points.
You said 30 divided by 4?
No. I didn't do that. I didn't do that yet. I'm not there yet. You're jumping ahead of me. I'm counting the distance from the 3084 to the 30 to 33. is
yeah,
216. And then
yeah,
to 34 is 316. Meaning that if you write the 33 cover call, you can get 2.16 share growth. If you write the
yeah,
34 cover call, you can get $316 share growth. Do you follow me?
yeah.
Per contract.
I'm not following you there on that calculation. What did you do again?
I'm
Explain
counting the share price
the share
to the
price.
strike price.
The share price from what
I'm counting the share price to the strike price.
to the strike price? Oh, I see what you're saying. Yeah. Okay. So 30.89 to 33.
So 34 would be 316. Am I right?
Okay. Yeah, that's fine.
So
30.889
now you
to
told me
$34.
that the bid for the 33 is 325, which is great, by the way. That's like 10% return, right?
Okay.
But also let's and then we compare that to the 216.
Yes.
And then let's look at the bid for the 34.
The bid
And we'll
for
compare that to the 316.
34, the bid for the 34 is 2.58.
Okay, these are very close, Curtis. So you can either do the 33 and the 34. And the point is that you have what's called a sweet spot. Write this down, sweet spot.
Sweet spot. Yep.
When I do a cover call, I look for the sweet spot, which is to say that the premium I'm getting is equal to the distance from the share price to the strike price, which is also known as share growth. So when I get to a stop, when I do a cover call, I don't just want to get premium, right? Listen, I want to get premium plus I want to get movement of the stock going up.
Okay.
Now remember, our stocks are going up because we're doing check marks for positive companies. We're
Yes.
following the trend going up.
Yes.
So I don't want to just get premium. I want to get premium plus the share growth. And that combination is the best successful return you're going to get.
That's a golden nugget right there for me.
Yeah.
I've been just choosing the next one up and trying to make a couple of dollars there. But
So
I like
I'll
the
tell you
math
this.
there.
I'll tell you this. DJT can easily go up, easily.
Mm-hmm.
So let's just do the 34
Okay.
strike for 258. Okay.
Yeah.
Now we do the math, right?
Yeah.
We do 2.58
Okay.
divided by the share price we get in today is 30.84. Even though it says 31, don't worry about that. Just go by the price of the
30.89. Okay. And that
And I'll
gives
tell you
me
why, because
8%.
you're gonna get more than 258 come Monday. Okay.
Yeah.
But just for if we did it to end of Friday, this is what you're gonna get. Okay.
Yep.
So divide 2.85 divided by 30.84. What do we get?
It's 8%.
Is it 0.08?
0.0835.
Oh wait, what?
0835.
Yeah, don't cut off my 3.5.
Oh, okay.
Don't cut off my 3.5, man. That's gold right there.
Okay.
8.35, 8.35%.
Yeah.
I'll tell you why, because here's what I'm thinking when I do a cover call. In my mind, I'm gonna do 10 cover calls a year.
Yep.
8.35 is 83.5% return per year in this stock.
How you say that one more time? Make sure I heard you right.
I'm getting 8.35% for 1 month, correct?
Yes.
In my mind, I'm going to do 10 covered calls a year.
Times 10, 83%. Holy shit.
That's my win goal. That's my goal. That's my business. I'm putting $3K per contract.
Yeah.
I'm going back $258.
Yep.
I'm going to repeat. And what might happen is the stock might go up a little bit. I might get some share growth because we don't agree to sell it until, in this case, the 34.
Yeah.
Do you see how you get share growth on that?
Yeah. So you get in those two
Now,
points.
consequently, like you said, the inevitable, it will come down. So we may have some share growth loss.
Yeah.
And I get that. But here's the thing. It's not going to come down every month, Curtis.
Yeah.
It'll probably maintain and ideally go up. So we make the actual return, because the share price may go down, The actual return may be 50, 60, 70, 80, 90, or 100%.
Yeah.
But on paper, our goal is 83.5%. Write it down.
Got it.
And when I say 10 cover calls a year, you have like 2 months to kind of like reevaluate, because there's different reasons, but write this down. I do the cover call 3 to 7 weeks.
3 to 7
is my specialty.
Okay.
So if I'm, let's say I'm in July,
Yep.
I'm gonna write the August, in this case, August 16th. Technically, it's 5 weeks. Okay.
Yep.
And then any given month, no matter where I am, I'm gonna generally do the 3 to 7 week cover call. That's the best return that I found.
Okay. So you're doing these in tandem?
With other other positions?
No, with this is with other cover calls for the same strike. I mean, for the same stock
But in tandem with what though?
itself. So you would do, you would have multiple cover calls for the same stock, is what you're saying? So you'll have you'll have one for 1 month, and you'll have another one for 3 months out, or are you saying?
No, that's not what I meant. That's not what I
Okay.
meant. I mean that anytime I come into a trade, I'm gonna write the cover call for 3 to 7 weeks out. That's gonna give me a nice return.
Gotcha. And then
And you
once
both find
that's
out, I
done,
can do
once that's
that 10
done,
times.
okay.
I'm sorry, go ahead.
No, I'm saying once that's done, then you reevaluate and you do it again, but not until it's done.
You're gonna just repeat through the year.
Okay.
You're gonna do 10 cover calls a
Okay.
year. Okay.
Gotcha.
So let's also do the math. If I'm getting 250, let's say 250, round
Yeah.
it down. I'm getting $250 every $3,000 I put in. Okay.
Yeah.
If I get $250, that's times 10. I'm getting $2,500 per year. That's my business. Okay.
Yeah.
I have a $3,000 investment, which is 100 shares of DJT.
Yep.
I'm writing a cover call monthly. I'm getting $2,500 a year, $250 a month, and I have a 2-month grace period.
Yep. And what do you
In other
mean?
words, you can do 12 cover calls, right? But you can mess up and do 10 and still do it right.
Gotcha. Okay.
Make sense?
Yeah.
Okay, and that's a big part of what I want to focus on, because when you're trading, it's more difficult. You're gonna hit and miss.
Yes.
But these cover calls, you really don't miss. Not
Yeah.
really. Okay.
And
and
one
another
last
thing,
thing, and then we can continue on. When the stock does go down, do you recommend buying that cover call back at that much cheaper price and then rewrite a new one at that point?
the first lesson is not to buy anything back. That's the first lesson. Just let it expire,
Okay.
because I want to make that the foundation. Okay.
Okay.
I don't want you to like trade your cover call and then lose money and then you mess up your 83%.
Gotcha.
What I want you to do is do this for several months, maybe even a year, to do this cover calls just vanilla, black and white. Okay.
Okay.
And then check your return, check your consistency, do your accounting, and then
Yep.
see your results. And
Yeah.
once you get very comfortable, once you're have a lot of faith in your trading, they want you to start trading your cover call, because again, you're bringing in more risk when you do that.
I see. Okay.
If you write the cover call for 250 and it goes down to say 50 cents, I would say that's a successful trade to buy it back.
Yeah.
But then what happens? You're giving back 50 cents, right?
Mm-hmm.
So in that way, you're lowering your return.
I see.
So in a general sense, the first lesson is just to don't trade it, just let it expire. And only when you feel like you're an expert, to want you to start trading the cover call. Make sense?
Okay. Yep, makes sense.
Okay, now moving on to Any
Number
questions on that?
Nope, number 6.
Okay, number 6 is can it double? This one, you know how I said look at the 10-year chart? This one I want you to look at the 3 to 5 year chart.
Okay.
And the 3 to 5 year chart, if your stock has doubled in the last 3 to 5 years, it gets a check mark.
Okay.
And a lot of stocks have doubled in the last 3 to 5 years. Look at Dividend, doubled.
Yep.
Look at Apple, doubled, tripled. So this means the stock is like really hot. Have you seen Wall Street, Michael Douglas?
Yes.
Of course, right?
Yes.
Blue Horseshoe loves, the video. It's hot. It's doubling, tripling.
Yep.
So that's a new check mark, new criteria.
Okay.
And I'm gonna run by the rest of them, but I want to explain them all.
Yep.
Just number 7 is new all-time high. Write it down.
Yep.
New all-time high, number 7. Number 8. Wait, I messed up somewhere. Oh yeah. Number 7 is new all-time high.
Yep.
Number 8 is market cap. Market cap is 50 billion.
50.
I noticed the stock when it passes the threshold of 50 billion,
Okay.
it's gonna last. It's gonna be able to withstand the test of time.
Okay.
I was in Chipotle during the pandemic,
Okay.
and I was with it when it broke through that 50 billion threshold. And I remember they were the only chain that didn't close down.
Yeah.
All the other restaurants were closed. They were ready for what happened. They stayed open. They started doing orders, the delivery orders, pickup orders. What do you call it? Because all the restaurants had to close the inside, right?
Mm-hmm.
They had to close their dining room, whatever.
Yeah. So
I was there, and they were ready to go, and they never closed. And I was with this threshold through 50 billion. Now it's something like 60, 65 or 70 billion. I didn't check it recently, but so ideally, you want to be in a stock that's increasing in market cap, not decreasing.
Okay.
And once it passes the 50 billion threshold, it's good. It gets the check mark.
Gotcha.
There's more to it, but basically 50 billion. That's it.
Yep.
Number 9, stock splits. Go to stocksplithistory.com. It's a website, stocksplithistory.com, and you can put in your symbol, Apple, the Netflix, the video. It'll tell you how many stock splits the stock has had. Some stocks have had, most stocks had no stock splits, but a stock split I find is one of the best, most powerful indicators of a great all-time stock that has not any stock can do a stock split. These stocks have gone up and up and up, and then let's say to Nvidia's case 1200, and then splits 10 for 1 to 120. What happens? Goes up and up and up. And again, most stock splits are 2 for 1, 4 splits. Yeah. But these stocks are split. So Chipotle just had 50 for 1.
Stocksplit.com.
Yeah, stocksplithistory.com.
Oh, okay, I'm there. Got it.
See if you can put in NVIDIA. NVIDIA. So find a little box. You should let you click off on all of the boxes. Click off on all those ads. The key with those ads.
NVIDIA stock split history.
See if you can put NVIDIA in the symbol. It should be easy to use.
So they've had 2, 4, 6 of them.
6 splits.
Yeah, 6 splits since 2000.
So the theory is, if a stock has had several splits, let's say at least 2 or 3, then they're going to have more splits.
Yes.
But if they have even 1/4 split, they get the checkbox.
If they've had 1, you said?
Even 1, yeah, just 1. One split gets the checkbox.
Okay.
But what you'll see, Curtis, these stocks that have gone, 3,000-fold, Microsoft, Walmart, Coca-Cola, Apple, they've had many stock splits, 5, 7, you know.
Yeah.
So this is what you get exponential return. And this is using the advantage of your stock going up over time.
Okay. Now,
Remember,
when they say stock splits really don't, it's an accounting gimmick and it really doesn't change anything, but you disagree, as I understand it.
100%.
Okay.
100%. You know who would tell you that it's an accounting trick? You know who would tell you that? An analyst who works at a company that's a big stock but doesn't trade himself.
Okay.
You know what I mean?
Yeah.
Like you can find a book on poker playing, but
Yeah.
that person who wrote the book may not even be a poker player. He may be trying to write a book.
Yeah. Or not very good at it.
Or not very good. You can find a poker book and disagree with it, correct?
Yeah, I got you.
Okay. All right. Now, number 10 is share price.
10 share
This
price.
is like a minor thing right there in the share price. I want a healthy, strong share price, which is to say the stock needs to be 100, 200, $400 a share. Why do I say that? Because high share prices are high because the stock has gone up and up and up and up, and it's proven itself, and it's made money for investors.
Yeah.
And these other share prices are $5, $10 penny stocks. They haven't gone nowhere. $20 stock. Where's the $20 stock gone? $20 stock has gone nowhere.
Yeah.
But Apple,
Except
now you're going to consider these stock splits, which obviously bring the share price down. But even with the stock splits,
yeah.
maybe $100. The sexy price, I think, for a stock right now is about between 100 and $200.
Yeah.
AMD, AMD,
180.
yeah, Nvidia, Apple, right?
Yeah.
They're all kind of now these stocks are all kind of working in tandem. They're like, well, hey, look, we're $500. Let's do a stock split. They're all kind of on the same wavelength, and that's how you know. And then when they're all successful, you just follow what they're all doing.
Gotcha.
Okay, they get a check mark. They get a check mark for having a high share price because the expensive stock is better. And here's another thing: those accountants they're analysts that don't do shit but do paperwork. They'll tell you, "Oh, the share price means nothing because it depends on the stock." No, not true.
Yeah.
The share price indicates how high the stock has gone if it's a high share price, and that's better than the low share price.
Yeah.
So, and this is like reverse psychology. Like you'll hear people say, "Oh, that's too expensive. I'm gonna SMCI."
Yeah.
Supermarket is too expensive. I'm gonna wait till it drops. What? No, dude. It's a high share price because it's doing great. What are you talking about?
Yeah.
It's like, do you want to go to a buffet, or do you want to go to a steakhouse?
Yeah.
I mean,
yeah.
that's a share price. Right? That actually, that's a great analogy. Do you wanna shop at a buffet or a steakhouse?
Yeah.
What are you investing in? Right.
Gotcha.
All right. And last one is, can you buy the product? This one's kind of minor,
Can
but
you do what?
can you buy the product?
Can you buy the product? Okay. Yeah.
This one's kind of minor, but it just shows that if you can easily access the product, you can go out right now, leave your office, and go buy the product. It gets a check mark.
Okay.
Nvidia has computers. They do graphics cards, so that gets a check mark.
Yeah.
Starbucks, you go to Starbucks, you get a coffee.
Gotcha.
Netflix, you do a Netflix stream to your living room, $20 a month, etc. But if you're in a stock like Palantir, PLTR, and they do counter-terrorist for the military, you can't buy that.
Yeah.
It's not get the check mark. And there's other companies that you can also not very easily buy that product.
Mm-hmm.
So that's just one indication. I like to use that. There's other things, but those are the 11.
Yeah. So I'm thinking Amazon, and you can go buy product from Amazon. So there's that count.
Yes.
Okay.
Because you can use it. You can use it interactively.
Gotcha.
Matter of fact, that's a great one because you just click your phone and it shows up at your door.
Yeah. Okay.
As long as you have the money.
Yeah. Okay.
Questions?
No, this is great. I really like number 5 with the cover calls, and I would like to know if you could just send me kind of a formula. I'm a visual person, like I was listening to you, but if I see the formula on the calculation between the actual share price minus the strike price and just how you're doing that calculation. If I see it, I'll get it completely, but it's a little fuzzy for me, but I conceptually get it.
Let's just talk about intersections. I don't want to send anything. I want you to rewrite your notes, and I want you to get it. Let me just run over it real quick.
Yeah.
When you're doing a cover call, you're going to write the sweet spot. Okay.
Yep.
The sweet spot is when the share growth is the same as the premium.
Share
so let's
growth
say,
thing.
yeah. So let's say we have, let's do super microcomputer. Can we do that?
Okay, let me look at that.
SMCI. Can you pull that up?
Yep. 1 second.
And let's do August 16th. Let's do 1 month, 34 days.
You said MCI?
SMCI.
Okay, there you go.
Do you see the Dow Jones is 40,000? Isn't that nice?
Yeah.
Isn't that beautiful?
Yeah, that's nice. So okay, I have it pulled up. What month do you want to go to?
We're gonna go to August 16th.
Okay, I have it open.
So give me a share price.
Share price is $909.96.
Okay, wonderful. Now, how much does it pay for the 960 for August 16th?
The 960. Let me add a couple of more strikes here.
Put all.
All. Okay. So the 960, the ask is 76.20, 76.20, and then the bid is 74.50.
Wow. All I say is wow. Let's look at the 970, sir.
Okay. 970 is 72.80 and is the ask, and the bid is 70.80.
Okay, let's look at the 980, please.
Okay.
Tell me the bid first, if you don't mind.
Yeah. So 980, 980, the bid is 67.60 and 67.60, and the ask is 69.50.
I think we found the sweet spot.
Okay.
Because look, the 909.96, right? That's the share price.
Yes.
Let's just say 910, close enough, right?
Okay.
And then count from 910 to the 980. That's 70 points, correct?
Yes.
And look what it's paying, 67 to 69. Okay.
Yep.
Now I'm gonna add a golden nugget for you. You can, if it's 67 to 69, you can put 68 or 69. And
Okay.
it'll probably take, it might take 20 minutes as a limit order, but because there's so much volume, and again, volume is important. Because there's so much volume, someone's gonna buy that call and give you that 68, 69 premium. Okay.
Yeah.
But just at the market order, if you do a market order, just at the bid, it's gonna give you at least 67.60. Follow me?
Yep.
And that's closest to the 70 share growth.
Oh, I see what you're saying. The 70-point difference between there and then what you're actually getting. Okay.
Yes, and if you do this month after month, year after year,
Yeah.
okay, I want to tell you, I remember doing 71 cover calls on Twitter.
Oh, wow.
So I paid for that stock over and over and over again in premium. I got paid.
Mm-hmm.
So you're looking to get this share growth, which is in this case 70 points.
Yep.
And also the premium, which is almost very, very close to 70 points, 60, 68, 68 points. Okay. And when those two are the most equal, that's the sweet spot. And that's the one, that's the cover call one to the right.
Okay. So when it's
Is that more clear?
Yep, that's much more clear.
Now let's do the math. Can we do the
When
math?
I write it up, I'll make sure that I have it correct. Go
Now,
ahead.
can we do the math on this?
Yeah.
Okay, let's do 6760.
67.60
divided by 909 and 96 cents. What do you get? What percentage? Don't cut me off now. Give me all the numbers.
That's not right. Hold on. Say that one more time for me.
6760, which is a premium. So let me walk you through it. We're gonna spend 90 grand, okay?
Yeah.
Buy 100 shares of super microcomputer right here.
Yep.
And then when right away, write the cover call for, we found the sweet spot, which is the 980. What you get? You gotta get 6760. So we divide 67.60
Yep.
divided by 909.96.
909.96. 67.60 divided by 909.96. That's 74.28%. No, 7%. So 7.42%.
So it's 0.07428.
Yeah.
Wonderful. So we moved the decimal over two places.
Yep.
We get 7.428%.
Yes.
And we can say 7.43. Is that fair?
Yes.
Okay, so we buy the shares here, 90K, buy 100 shares of SMCI. I write the cover call for the 680, which is the 980, which is the sweet spot.
Yep.
And we get $6,760 at least. If we do limit order, maybe more.
Yeah.
Can you see me okay?
Yep, I got you.
And that is $6,700 income per month. And that's going to do what? That's going to pay for, let's say, the mortgage, take my wife out to some dinners, buy some clothes for the kids, pay for some Starbucks and Netflix streams, maybe water and power.
Wow.
Every month.
I'm having an epiphany here. I'm doing this wrong, day trading.
Look, this is a foundation, okay?
Yeah.
Once you get this as foundation, you can start day trading. But if you find out your day trading does not improve your foundation, then you want to limit your day trading to the absolute best trade you can get.
Yeah.
Questions?
No, so that's 89% a year.
Yes. Now, supercomputer may go down. So here's the thing: the share price may go down. Let's say 20%. Okay, that's going to happen, right? But here's what you do. Okay, this is just math, right? If we're getting, let's say we're getting 7% a month, 7.4, right?
Yep.
But and let's say the shares drop 20%.
Yep.
Now, similar to real estate, you can own some apartments, and the real estate value may drop 20%.
Yeah.
But you can still rent those rooms out, correct?
Yeah, correct.
So with cover calls, we buy 100 shares, loss of 100 shares, contract per contract. The share price may drop 10, 20%, but you can still write those cover calls.
Yeah.
So what I want you to do, let the share price drop, continue to write the cover calls, get out of that hole. Okay, you're digging yourself out of that hole. If you're getting 7% a month and the share price has dropped 20%, how many months would it take to get back to even?
So it's $18,000 at the 20%. So it would take divided by 7.46. So it'd take almost 3 months.
Let's just say 3 months, close enough.
Yeah.
So it will take you 3 months to get back even,
Yeah,
and then the other 9 months profit mode.
I got you.
So maybe you're gonna make 60% or 50%. I won't get mad at you. I won't be like, hey, you effed up, man.
Yeah,
I'll be like, you did great. You still did great.
yeah.
You can mess it up and still do great.
That's pretty genius right there.
I've been doing this for a while.
Yeah.
And that's kind of one of our foundations, one of our pillars.
Okay.
What's our time like?
I'm good on time. Just whenever you're ready. We're at 11:29 now. We started about 10:15.
Why don't we end on a positive note?
Okay. Sounds good.
We're gonna reconvene next Saturday. Is this time
Yeah.
good for you?
Yeah. If you have earlier, that works for me too. I'm an early bird, but if not, this works.
You know what? I get a chance to do breakfast with the family,
Okay.
and that's better for me.
Yeah. 10 o'clock works. 10 o'clock this coming Saturday works for me perfect. And
Okay, I
then,
want you to rewrite your notes so it's
yep.
neat. I wanna issue some homework. Can I issue some homework?
Yep.
Rewrite your notes so it's nice and neat, and then send me a picture of your notes.
Okay.
I'm gonna put you on the spot.
Okay.
Doesn't got to be, just so I know you can go back and know that we had a session, that there's some logic here, right?
No, I got it. No problem. Like I said, I'm always motivated when I'm learning something new, and like the cover calls, like that was.
And yes, and once Zoom sends me this recording, I'm gonna send it to you probably later today.
Okay, sounds
I
good.
want you to download it and save it.
Yep.
That's for your library.
Yep. Hey, I appreciate it. This has been good.
Thank you, Curtis.
Yep.
Be back
Absolutely.
next week.
All right, sounds good. You take care.